So a few days before Christmas, Google's parent company, Alphabet, agreed to acquire the energy and data center developer Intersect Power for roughly $4.75 billion in cash, plus the assumption of debt. And the deal is expected to close in the first half of 2026. Intersect was founded in 2016 by Sheldon Kimber. He's the former COO of Recurrent Energy. And the company had a very specific thesis. Don't just develop renewables, but build integrated power platforms capable of serving massive energy-intensive loads. And over the last decade, Intersect has become one of the leading developers of large-scale solar, storage, and hybrid projects in the U.S. So Intersect is now going to become a dedicated in-house development engine for building power and data center capacity in lockstep with Google's technical infrastructure team. And I want to talk about the structure of this deal, why Alphabet, Google is making this acquisition, why this acquisition now. So let's dig in. Caroline, to you first. Why did Alphabet make this acquisition now? What's the problem that Google's trying to solve here?
First of all, I should probably say it's not approved yet, so there's not too much we can say or know. But if you go back about a year and a half ago, almost 2 years ago, most of the hyperscalers were coming to terms with the fact that there needed to be a shakeup in terms of the balance between how much do we vertically integrate, how much do we third-party rely on that full supply chain of building our digital infrastructure. And if you look at each one of us, everyone is a different recipe for how we're doing that. Where Google has landed is largely on the vertical integration side, save but for the actual construction of its data centers. And that, at first, everyone thought was a terrible idea. And I think after the last couple of months, that thesis has played out for Google, right? And I'm oversimplifying it a bit. Of course, there's third parties for a number of parts of that supply chain, and there are trade-offs and pros and cons to both. But in terms of capital and in-house intelligence, chips, the snowflake designs of Google's data centers, they've been vertically integrated on a lot of it. Where I think Intersect makes sense, and I'll say that it's been a thought at Google for a long time. I mean, I think for the past 5 years, we've been questioning, should we have our own supplier? Does it make sense to have our own supplier? 5 years ago, it didn't. It didn't make sense. At that point, like I said, the vast majority of our energy responsibility was meeting a sustainability goal. Now it makes sense. And it makes sense because there is no way to procure the option on power in this country unless you own it. And if you can't procure an option on power, then you have to figure out a way to move that power, ramp it up or down in a way that's going to work where you have control over where you grow. And that's why I think, the acquisition makes sense. And I don't think it's an acquisition because Google believes the returns are going to be there to challenge the returns they're making as a tech company. I think the acquisition makes sense because it decreases operational costs, it improves speed to market, and that is incredibly valuable in terms of a competitive advantage. And it's a good team, I think culturally it's a good fit as well. So, hats off to the energy team and the biz ops team at Google for driving it through.
Yeah, Jigar, the Intersect team, Sheldon Kimber well. What stands out to you about this deal or about Intersect in particular?
So if you look at the Big 10 developers in the country, right? So think the board of ACP. The vast majority of those companies are bond companies, right? So the whole point of their existence is to buy up projects from other developers, right? And then find someone like Google to sign a PPA and then figure out what the spread is and then put it into their yieldco, right? That is the entire game, whether it's Brookfield or NextEra or whatever, right? Sheldon was the first person, because we put the first money behind the strategy that Google bought in 2019 and when I was at Generate Capital. Sheldon was the first person who basically said, we are giving this power away for free. We should not be selling this power under these PPAs with Google or Microsoft or whatever, right? And so he basically said, I am going to create naked projects with no PPAs because I am not giving this power away for free, right? And I don't want Morgan Stanley to give me a 5-year strip for the tax equity. I don't want to sell this power to anybody but the wholesale power market for whatever it's worth, right? And we bet on that when I was at Generate Capital. We were like, yeah, this power is worth 7 cents a kilowatt hour. Why are you giving it away for 3, right? And Sheldon like put his entire development margin at risk, right? So he got no money up front for any of the projects. The projects basically got funded with debt and then mezz and, tax equity. And then he gets paid if everyone else gets paid, right? And so that was a structure he created. Then when disruption started occurring in the marketplace in 2022 because of the Ukraine conflict, well, he had naked power. So he had the ability to sign contracts at much higher prices to all the hyperscalers and other people, right? And those assets, by the way, that have already constructed are not part of this deal, from what I understand. Those assets are outside of this deal. Mm-hmm. But because all of his assets were, preserved all this option value, well, now Google could pay for that option value within this within this issue, right? Which is not true for NextEra and Brookfield and all the other folks. Like most of their assets that are at notice to proceed have like signed contracts. They have all these things in place, right? So there's no option value for Google to buy.
I think for any developer listening, and I think I've said this a few times, but being able to provide an option on power or an option on infrastructured powered land is the most valuable asset. It's not something that our energy markets were built to do. It's not something that necessarily the laws of physics were built to do and the way the grid was designed, right? To our, circling back to our first conversation on Talon. But if you can create that contract structure through exclusivity, then, you're able to be fungible across your portfolio. And that is something that is priceless right now in a speed to power.
And it's the reason
race.
why renewable energy is winning. I mean, that's the thing that people don't understand. There is not a single natural gas project happening in the entire United States of America right now that's merchant. There is not a single deal that's LS Power like from the 1990s. Every single deal is out of the money. And the only way to do the deal is to rate base it by an integrated utility or to have a rock solid contract with a hyperscaler that's paying above market, right? There is
no one wants to do merchant. No one wants to do merchant.
No one wants to do merchant, right? Yeah. So the fact that Sheldon is like, I'm going to do merchant, right? Like, is a game changer. And it's the reason why Republicans hate ERCOT right now in Texas, is they're like, these rules don't let us build any fossil fuel. Why are these rules not allowing us to build any fossil fuel? Like when you see Doug Sheridan or others on LinkedIn, they're like, we hate ERCOT. Why? Because they're basically like, this is not giving us the outcome that we want. Only batteries and solar are getting through this gauntlet, right? And it's just like, it's the weirdest thing to me that now I've got to deal with a bunch of conservatives who are no longer capitalists.
It's a good learning lesson for the market, is that it's not an energy plus Rex game anymore. It hasn't been for quite some time. And I think any developer going to the market just trying to sell 30-year PPAs, energy PPAs that, look like the same thing we were buying in 2021 have sort of missed the alarm clock, And I think this is a really smart investment. I can't say that there are going to be a stream of acquisitions after this. I honestly don't know. It was always and is always a question at Google, and I'm sure at every other major tech company. But this one makes sense for operational flexibility, and anything that does, I think you will see increasing investment in.